Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So today I've got a great question for us all. Last gasp or first surge? I think the real conundrum here is, can the markets continue to go higher? Volume is dropping quite significantly. Commodities are trying to turn up this week, which is interesting, and so are industrials. There's a little bit of a bounce showing up. So the real question is, can they start to take hold, industrials, materials, and energy, or does it all just roll over? So I've got lots of interesting charts to kind of discuss this. So we're going to go through the current market, then I'm going to show you the commodities that are trying to bounce here, and hopefully if you see anything there, hopefully it'll help you out here because the market's quite tricky. So let's check, and if you've got anything that you'd like to check out over at Osprey Strategic, feel free to do so. Again, there's always a 1-month trial offer for just $7, and thanks for taking a look. Okay, let's go into the charts. So where I want to start is, here's the S&P 500, and I'll just refresh these. So we're sitting, this is a 60-minute chart, and you can see the NASDAQ's leaking a little bit here. Made its highs about a week ago. And so same for the S&P. Last Tuesday was the high, and we're just watching to see if the market's got enough strength to break out. Now, this is a different setting for the PPO, but you can just see it's flatlining here, and most of the rate of change indicators have been trickling lower. Doesn't mean they're going to fall, but trickling lower. And for the NASDAQ, almost all the rate of change on the 60-minute charts are now falling below zero. So I'm watching to see what happens here now. I've got a couple of charts. So these are the daily charts, and again, these indicators don't work on SPX or the NASDAQ. So I'm going to go over to these other charts. So here's the S&P 500 first, and I produced this chart yesterday for my clients. And what you see here is a real important horizontal support and resistance layer. And and on that layer, what we're watching for here, we still have a series of a low, a higher low, higher high, or sorry, higher low, and now the real question is, do we stall here or have we got the energy? And some people are drawing a head and shoulders top here and a whole bunch of that kind of stuff. What I'm noticing is the precipitous decline in volume. So yesterday we had a volume in around 1.9 million shares traded, and so I put the black line right at that volume. Now for November and December, it's not a surprise to be below that level, but what we want to watch for here is back in August, and we might remember that the stock market topped there, and then in May, June, the stock market topped there, and in March, April, the stock market topped there. And it spent a few days down in those low levels before it actually rolled over. But that's the real question here, is do we have enough new buyers showing up? And on the S&P 500, we've got a big downsloping momentum trend line that we're just about to come into here. So it's a little more difficult to judge whether or not the market's going to turn and break out here. And again, we've got CPI tomorrow. We've got some earnings starting with JP Morgan, I think, on the 14th. So some interesting questions for us there. Now, if we go over to the NASDAQ, and again, remember these four boxes here. If we go over to the NASDAQ, what we see is we have the same low volume setup showing up. We had it in December and in November on the back of the holidays. But then in August, at the main market top, we had it. We also had a choppy period at the end of July, or beginning of July, with very low volume, almost a whole week where we had nothing going on. But then from there, we were able to finally revert higher and get going. So it's a real important thing to notice. Now, we are starting to get our PPO rolling over on this chart here. So we have an uptrend in higher lows in momentum. We have right now what looks like a divergent high. So we have a high here, a lower high here. We have a high here, a higher high here. So this looks more optimistic than this. And we just need to watch and see which way this unfolds. So it's a pretty interesting place on the chart. Now, Again, these low volume setups could take a week or two to play out. If you look at how this went, so we had some low volume starting to show, I'll call it last couple of days of March. And then if you look up here, that was kind of as we ran into the highs and then rolled right over. So so you could still have another, I'll call it thrust up, and just see if the market has any new buyers showing up or if we continue to have low volume. So that's kind of one of the problems we're having right here, right now. When I look at the different index groups, and I'll just refresh the page here. So what I've done is I've set up all of the sector ETFs into one chart list, and I've just shown it here on a 3-month view on CandleGlance so that we can just look and see what's going on. And I've got a couple of other sectors in here like oil, energy, and retail, oil, semiconductors, and retail. But XLC still looks okay. XLY, discretionary, sitting right on the 200-day moving average. Same with the oil, sitting right on the 200-day moving average. XLE is sitting right here, trying to break through the prior high. And again, oil gapped up on prior Monday, and we've just held in a very tight range with the energy stocks. And so the real question is this consolidation, are we ready to break out, or is there just, are we having trouble attracting buyers? And if you look at the XOP, there's just no real volume showing up on these charts. So are we going, is it just there's no sellers, or what is it? But I mean, XOP could expand its ETF as much as it wanted to add more shares. So here's XLF, and you can just see we're trying to break through the prior high, so that's a little bit better looking than kind of the Gasp we were in the middle of March. And then XLV, the healthcare ETF. So again, XLV, XLP, and XLU are considered defensive. So this one, you see the scooter ranking starting to ramp up. Here's XLP, same thing, and XLU. The same thing again. You're seeing the scooter rankings on all of these defensive sectors start to go to the top of the pile. So we want to watch and see how that works out. Now, here's XLK, and again, the chart's still looking okay. You're above the 20-day moving average. We are getting a sell signal on the PPO. Excuse me. And on the semiconductors, we're making a bit of a lower high here in momentum now. The question is, can we turn and just keep going? And that would be obviously good news. The scooter ranking still hasn't slipped, and we started to get some red bars here, but it was okay. And retail is trying to perk up again here. So really a mixed market. Now I want to focus on XLI right here, and XLB, and you can see the nice push today in XLI, so it would be making a higher low. And then here's XLB, and it made a higher low back here, a higher high, higher low, and now the question is, can it break out to the upside? And so PPO has been negative for all of March, so moving back into positive territory here would be something good. And also for the trend in XLI, if this could finally start improving, that would be good to see. But again, the defensives have started to lead. So as if the picture couldn't get any more cloudy, we're just trying to figure out which ones are going to really take the ball and run with it. So is XLI just going to stay consolidating in XLF, and we end up moving over into these defensive sectors? Or can XLY, the discretionary, finally get going? XLC Communications has improved on two reasons, right? One is TikTok has been slowing down, or the allowability of it has been slowing down, and so people have moved over into YouTube videos and into Instagram. So watching closely to see how those evolve. But when we, again, if we're going to see semiconductors start to, just basically go sideways here, that's an important question for us. So when I looked in on the, the mega caps, what's going on with them? And here's the group. So you can see Apple's having its first red candle since the middle of March, roughly, or the 6th of March. And then Amazon, same thing. AMD, the second red candle in a couple of days here. Meta still holding fine. Again, no volume to speak of on any of these charts. All the volume's drifting off quite meaningfully. So is that lack of interest or just lack of sellers? But all of these charts are showing no real upside volume, and so that concerns me. Now looking at Google, or Alphabet. You could just see made a higher high here in price, and then so far momentum isn't quite confirming that. So we just want to watch and see how these charts are working out. Here's Microsoft, again, a red price bar here, and Tesla, it's been on a red price bar for roughly a week, but it is bouncing up today roughly 3%, and this is recorded on Tuesday morning. So NVIDIA has been sideways for 2 or 3 weeks, nothing really to worry about. But again, you're starting to see on the group here, you've got 1 red, 2 red, 3 red, not end of day, Microsoft 4 red. So out of the group of 8, half of them are starting to flash red for the first time in a while. And so is that going to roll the whole market over? Okay, great question. So let's go look at something like oil. What we see here on oil is it's trying to break through this prior resistance, and if it just bangs its head, does it roll back down, or how does this work? And you can see the PPO, and again I use a different one for my 60-minute chart, 40, 10, and 27. And what you see here is this is rolling over and about to cross, so I want to be interested but careful here. Now looking at the chart, this looks pretty bullish, trying to hold up right around the 200-day moving average. But the main reason for the sensitivity around oil is that oil is an economic indicator, and typically if the economy is going to start sliding, we want to watch and see how that is going to play out. So let me post an example here for you. So if I just take XOP and I take the QQQ, and put the two charts side by side. I'm more interested on a daily, but what I want to point out, so here is August, and you can see in August as XOP topped out, so did QQQ, and we fell hard down from there. And then in November, and again, that was one of those low volume spots. And then the highs that the XOP made in November, the stock market or the tech NASDAQ 100 stalled at that level and really didn't do anything. Energy continued to dissipate. Then we had the highs at the end of January, February. This was a Fed meeting, and the oil had topped out just before it and continued to slide. So one of the reasons that I'm tying these two together is I'm trying to figure out whether or not energy and commodities can go on their own run. And again, the QQQ's got a scooter ranking of 90%. It's better than 90% of the ETFs out there. And XOP's been trading down around the 10% level and is trying to push up above 30. Now, I particularly like it when I see this kind of basing pattern and then it's starting to show enough energy to push back above. Now, if we just think about the OPEC trade on Monday a week ago, so roughly 8 days ago, everything jacked up meaningfully. And, if you were in these energy stocks, you've been living through pretty much a house of pain since November. But the real question is now you start to get a downtrend here. Can we break out? And then over on the other side, you're looking at, an interesting uptrend. But the real question is, does the relative strength start to break on the NASDAQ? So let's go back to this chart and let me just put the relative strength on here. One of the things that I notice is when relative strength breaks, that's a pretty important place on the chart. So I'm going to use price performance, and I'm going to compare it to the S&P 500. I'm going to put this above, and I'm going to make it, I always make it an area chart, and again, color, I make it purple. I turn the opacity down, otherwise it's quite ugly. But by making it a specific color, I keep track of, I can always glance at the chart and know that that's my relative strength indicator. Okay, so what we've got here, so this is the NASDAQ compared to the S&P 500, and what we want to watch for again is, does this uptrend in relative strength break? And you saw when it broke here and saw when it broke here. All of those were meaningful places on the chart to be aware of. So let's, we'll make the chart a little larger first of all, and maybe cut down on some of the data, just shrink it down to 1 year exactly. And now we're going to draw in our relative strength trend line. And again, what I want to watch for here is if this trend line starts to break, then I want to be a lot more careful, because when this one broke here, and when this one broke here, and when this one broke here, all of these were meaningful correction points on the chart. This little one, it's hard to use, but let's just suggest that for the same reason we had the problem. So that's one of the concerns I have here is, will the NASDAQ outperform, or on this light volume does it start to deteriorate? And again, on the light volume it started to break down, and that was pretty much, you know, a really good sell signal. Now the volume was weak for, you know, let's call it August 8th. It was really starting to get down to this level. Now, even most of the summer it was quite quiet, but you're starting to see a real meaningful volume pullback in the summer months, which isn't uncommon. But I think this relative strength indicator here would be a lot more helpful, just to make sure that if this starts to break, that's a problem. So again, let's go back and just compare this. So this is the 3-month relative strength trend line. And if this is going to start to break down, then we need to be a little bit more careful, right? So that's what I'm focused on here, overall, the big picture. Now, again, I mentioned that energy is trying to break out to the upside, and I've got some nice energy charts that are actually setting up here. So here I've got an oil and gas list, and so this is FANG, the Apple, Adobe, Microsoft, all that kind of stuff, but this is FANG, Diamondback Energy. And what you're starting to see on some of these charts is that these downtrends are starting to break, and PPOs are starting to give a positive buy signal. And so it makes for a really interesting trade here. Can we finally see, you know, this chart that's really gone nowhere for whatever, a year and a half? Is it going to start breaking out into the next uptrend? Anyway, what I want to do is edit this list, get rid of these numbers at the beginning. So I'm going to go to edit list. I'm going to select all the charts. I want to delete all the numbers off all the charts. So this here says remove numbers. And so I'm going to take those off the chart. Now I'm going to go into a sort mode like summary, where I can organize the charts any way I want. And again, you could do it by scooter ranking. You could do it by, you know, biggest percentage change over a week or something like that, you know, trying to find some of the charts that have changed the most, and just, you know, what's all of a sudden starting to get a bid would kind of be the way to sort it. So normally I would do the scooter ranking. I'll just do this percentage change view just to be different. We're going to scroll down a number in sorted order, and then again, one of the things that we want to watch for is the chart patterns that are starting to shape up. So now we should be able to go look at these in ChartList view. And again, you know, here's a huge downtrend on Tellurian, and it looks like it's just starting to break out of that downtrend. Like, that's a nice place. My PPO, you know, for me, this is perfect technical stuff for me. So I really like it when these downsloping trend lines break. And I'm going to change that line color here in a second. Just make it black, a little more thick. But what you see here is it's starting to break above the downsloping trend line and turn up. And then if we do this in price, and this doesn't always work out, normally what we'll see is momentum actually breaks before price does. But this is definitely starting to move up. So, you know, that's a pretty nice percent change. And then all of a sudden we've got, you know, we can add add an arrow here to this. And again, remember how I mentioned that the scooter ranking could be, you know, awful. So here it has been since the beginning of the year, living, you know, down here below 10 or 15%, and now all of a sudden we're turning up. So finally investors are starting to move this stock so that the price action has gone from awful to being better than 25 or 30% of the stocks. That's the kind of thing that I like to see, is that sort of change in bottoming momentum. And again, a lot of these stocks topped out last year sometime, and most of them haven't had a real move north in 2023, except for the most recent move by the Saudi Arabians to lift the price of oil back up to $80. So these are pretty interesting charts, and again, some of these are going to be more natural gas related, some might be more oil related, and I'll just show you the charts of dollar and NATGAS, and again, you won't have intraday charts here, but the point I want to make is NATGAS has been awful. I mean, this has just been a horrible slide from call it $7 in November to $2. So this is, again, I like this higher low in momentum. This is a really nice technical trade for me. And then I would draw my trend line across the top of the PPOs. It's just starting to break out. So, I mean, I could talk myself into this chart pretty much every day. And look at the volume starting to show up here on Monday's low. And then oil, again, we see this big jump up here, and what we want to watch for is, it's been underperforming in terms of the S&P 500. Prior, it was outperforming for a while and then really started to dip. So it's this downtrend that we're watching for to see if it can really break. Now, we see the 40-week moving average is tilting down on oil. Natural gas, it's awful, but the one thing I like about natural gas, again, is we're near prior lows. We're at a place where we're starting to make higher. We're changing the momentum indicator on the daily, right? It's gone from being awful to being better. And so now commodities, again, they do this. They go from ugly back into favor, and then they get to the top and they get out of favor. So the real question is, looking at the equity markets at the beginning, looking at the commodity markets here, I want to watch and see if these charts can change. Now, I've shown you how to just go select, these different energy charts and look and say, would you like to own this? Here's Integrated Oil and Gas Company. You're trying to break out above prior highs. Here's Phillips 66, and again, a little bit of a downtrend line, but pushing up. This is making new 2-month highs. Really, last week, you got the big surge, and then this week we basically consolidated, but we are trying to move higher. Here's Valero, sideways for 6 months. Sabina Royalty Trust, this one's finally pushing up to 1 or 2 month highs. PPO trying to bounce off zero. HF Sinclair, this has just been downtrending since November. Doesn't really look like it's perking up yet, but again, all of these charts, if they're going to start working, we should start to see them move together. Here's PBF Energy, and again, we made this high at $43 in June. We're sitting at $43 now, $42.50. So it's been a long hold with no real returns. CVR Energy, again, topping out in October. So we're watching to see if some of these charts, and again, some of the ones that have moved the most are not necessarily they might have been the dogs in the park. And now what we're watching for is to see if any of these can break out. So here's Petrobras, and this one is up 6.7% this week. And again, you've got your downtrend line starting to crack, your PPO turning up from a very low level. I would prefer to buy that PPO turning up from a very low level than, say, the semiconductor, where it's been up at a very, very high level and now looks like it wants to start to roll over. So my question when I look at all of these charts is, can they be independent, or are we going to see that correlation between the oil stocks and the regular, even the NASDAQ? Are they all going to drop together, or what will happen here? But again, I've got that low volume situation that I'm a little bit worried about. Okay, so again, I've shown you how to restructure your charts here to check for what's working lately. As Mark Haynes used to say from CNBC, the church of what's working lately. And a lot of these are starting to get a weekly PPO cross this week. So that at least is giving you a place to buy near the lows. And again, if you'd bought down in here, you got a 1 or 2 month push higher before they rolled back over again. The real question for me is, can they do that if the overall market lets go? And maybe the overall market can continue higher. That's what we're watching to find out. Okay, I want to point out one other thing. So we're going to go with CPER and COPX. These are copper and copper miners. And so what you see here is the copper fund is starting to push higher. Now the copper miners, some of these companies also produce gold when you produce copper. So you might actually see the move in gold affecting the move in the copper miners, which is fine. The real question is, here's the downtrend in copper. It tried to push higher earlier today and is pulling back. And then you've got this this chart trending higher, the copper miners. And again, it's trending higher while the gold stocks are starting to break out again. So really a tough question as to, can the industrials start to get going here? My big thing is the the volume has been weak on everything. On just about every chart you look at, you see these declines in volume. You're not seeing anybody really showing up to buy this stuff lately. And so are we just in a market doldrum, or, or are these charts about to turn higher, rip higher, and we finally get a bid? So that's the thing that I'm watching the closest, is just trying to figure out whether the overall market has any horsepower to the upside. And again, even just in the hour we're watching here, we're sitting right at this 13,000 level. I would just say for the NASDAQ, what we need to see, we need to have some real big momentum push to the upside. And again, when I go look at the FANG names, I don't see that. So I'm watching closely, and we were here roughly 2 weeks ago in this market. We're just kind of holding. My latest data is starting to show a slowdown. I watched some other work from some other technicians, and their signals flipped on buy signals on March 29th. Well, that puts you right up here, and so far the market is just consolidating. But again, for me, it's this low volume period, and so I'm having this mental debate, maybe just with myself, about which way this goes. Now, one of the really nice areas, obviously, could be talking about Bitcoin. It literally exploded higher as some of the Bitcoin exchanges in Asia came on, and all of a sudden Bitcoin literally popped to the upside. But here's gold. It had a 3 or 4 day pullback. It's starting to turn higher, but you see the gold miners are already higher. And again, some of this could be the copper companies starting to get in sync with it. So when I look across the broad suite, I see a difficult market with not a lot of volume pushing things higher. I see the FANG names start to roll over. And the real question is, can we get a bid here to start sparking things? And we're going to have some volatility as we get CPI. Wednesday, you might already see it by the time this video rolls. And then we get some earnings coming out of JP Morgan. And then the following week, I believe, is the options expiration. So all of those things add up to making it a pretty volatile next 10 days to see where we're going to land this market. I think if I had anything, I would just say, keep your stops relatively tight if you can draw an uptrend under something, and if it starts to crack, let the market just take it away from you, and don't be too worried about missing out. That would be my bigger thing, is I don't want to get trapped. With that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.